Turnaround Tuesday, Warriors. Hello, Face. How's everyone doing today? Hi, Patrick. How are you? So, I want to start with a couple of looks and a few observations in the metals. I know a lot of people have a lot of interest in gold and silver, and they've been sideways, so not a lot of interest. And I want to just show you a few of market tells that I'm getting in silver over gold. But let's start with Euro USD. This is my picture here. This is the way I'm looking at it. And when I drill down to a 4-hour, looks like a flag. Bear flag off the break from the Draghi from the ECB press conference. Of course, that changes over 24. I'm thinking we can make one more trip down here under 121.5. So potential bear flag here. I think that back under 123 should begin to seal it for another leg to the downside. Give me a Y if you're with me. And then I know Blake was concentrating on the yen. There was a similar formation in the yen that actually the yen broke out of, and it's probably going to get to Blake's sell zone. I think 108 was his level, but here you go on the 1 hour. Actually, we pulled back to a lot of confluence on moving averages right here at 106.40. I was talking about this with a trader friend of mine on Saturday. I thought I would get the short with one more drive first before this. So I'm not sure how much it's going to carry, but I think there's more than just today, at least another day. Pretty strong momentum up here. I'm not saying we can't pull back, but I don't think this will be the high, maybe a high, and could work towards that resistance and breakdown. Actually, I saw a look at a triangle breakdown on the daily. I don't have the lines here. Maybe it's a weekly. That we could really rally back to 109 and still be bad on the weekly. So a couple of nice weeks here. I know it's only Tuesday, but I see no reason to short it yet. Good eye by Blake that there was a yen rally coming and participated on it. We'll see what Mr. Confirmation has to say, Steve Volge, in a little bit too. But I wanted to talk a minute about precious metals. You know, Blake talks about sometimes, you know, he's known for seeing turns in markets before they turn. And I don't know how he does it, but I'm going to show you how I do it. So here's a look at the gold. That's your weekly. Let's drill down a little bit. It's doing nothing special, right? To me, it looks like we have another down leg coming here in the gold, but that's not really the message. I want you to take a look at the metals and keep this in your head. Silver, same thing, not doing anything special, maybe holding up, having a little bit more resilience than gold, but I'd still like to see him take it down one more time towards 1550. Eventually, I'm looking for 1850. And here's why I'm looking for it. I was always taught that the share should lead the underlying commodity. So remember, gold's moving sideways, right? But look at some of the gold shares. Look at this. It should be the other way around, all right? So gold shares are projecting weakness in the bullion. That's Yamana. This is Mux. Okay, looking for another drive down here. Now keep these in your head and look at two of the heavier traded silver issues, Coeur d'Alene. Nice look, right? Almost looks like it's breaking out. I'm wondering if silver has one more break, if we're even going to make another low. And here's another one. Here's Hecla. So Hecla challenging. Okay, much better look in the silver shares than the gold. Give me a Y if you see it. So, you know, I'm not sure. It doesn't mean that you know exactly the time when something's going to turn, but it tells you to be alert for one, and also demonstrates the relative strength. As you can see, the silver shares are stronger than the gold shares, and the silver shares are stronger than silver, the underlying commodity that they mine. So I wanted to teach you a little bit about how I get market messages early that tell me what I should be looking for and monitor and look for a good setups to enter it based upon that. And then just one other kind of unusual one to tell you how much of a lack of interest there is in silver. Like you guys know, I spend a lot of time on Twitter, right? So you do a tweet and a lot of people use hashtags, like, you know, I could use a hashtag and type in Bitcoin and you'll see Bitcoin appear underneath here, see? You know, you could do it for anything, the Dow. But look what happens when I try and hashtag silver. SILVER. Okay, so we have Silver Smith, Silver Anniversary, Silver Daddy. Yeah, that's what I used to be with my silver hair. Silver Lining, which is what everyone found at ForexAnalytix, and Silver Stone, which I don't know. So there's not even a hashtag for it. So what that means to me is people on Twitter sure aren't paying attention to it, or they'd be hashtagging it. So definitely out of favor. You know, it's done nothing for so long. But what I'm seeing in the silver shares, I just wanted to alert our community to it. I know it's not an FX trade, but it's an asset class, and wanted to give you my take on this stuff. Okay, everyone kind of get what my drift was. Silver shares stronger than silver. Gold bullion stronger than gold shares. Okay, silver stronger than gold. And it's been quite a while since I've seen this and been able to share it with you guys. So that's that. And I'm interested in what the team has to say with what's going on here in the markets. They still think that we're going to get 2830 in the S&Ps. I hope they're right. In fact, Kramer said on CNBC yesterday that Larry Kudlow is top choice to replace Gary Cohn. So ironic, because when I interviewed him, he didn't even think Trump was a viable candidate. Now he's going to be in the cabinet. But anyway, Kramer said that Trump likes Larry Kudlow because Trump likes a rising stock market, and he believes that Kudlow will be good to keep the advance going. So, you know, maybe he appoints him later in the week and we get to that 2830, but I'm looking to short the Kudlow pop. How about you, Blake?
Yeah. Yeah.
Huh?
You know what? The market's it doesn't matter if it's Larry Kudlow or if it's who it is, really. It's more of making sure there's somebody, an economic advisor that's in place that they'll give the market the comfort.
Yeah.
But you know, when you're talking about the equity markets, I still think that there's some upside here. I don't know if I would be fading risk necessarily. Let me go ahead and grab.
Didn't you have some formation up there around 2830, 2840?
Yeah. Well, okay. So just so you know, I was looking at basically 127% extension somewhere up here.
I like it.
Yeah, and I mean, Andre was looking at this, and he's like, well, that's not, it doesn't really qualify as a harmonic pattern. But regardless, why I'm looking for is I'm looking for a failure up here. If we can make it up there, and the question is, are we gonna even make it up there at this point? Because you looked at yesterday we had a failed breakout above the resistance here. Now we're still climbing in risk right now, but where we close today will be rather interesting. You said turnaround Tuesday. I don't know if that's really going to apply for today, but we'll find out.
Yeah, I had no turnaround Tuesday ideas today.
Yeah,
usually I have fades. Something I want to fade. There's nothing I want to fade today, really.
Well, yeah, there isn't. regarding like equity markets, I mean, you look at here's the S&P. You know, we did have that little failed breakout yesterday. The Dow hit triangle resistance yesterday, and really key resistance as far as I'm concerned. So maybe this is, you know, this is where the market does show failure. It's quite possible. But you know, you look at like the Nasdaq, for example. You know, the Nasdaq's ripping. I mean, we're still moving higher. I don't know if I'd fade the Dow. I mean, with the Nasdaq as strong as it is, and Amazon, you'd see Amazon. It's
Birdie told me 7,400 on the Nasdaq 100.
you know, probably, or you know, the 7254 for the Nasdaq 100 is the 161% extension of the, you know, post.com bubble. I mean, .com bubble. I mean, that's crazy, right? So, hey, regardless, you know, the market's still, you know, trying to move higher. Russell 2000 still pretty strong here. I mean, you see the Russell.
That surprised me.
Yeah, it's still grinding. I mean,
you know, the Nasdaq at new highs, it's not confirming. So I would love another couple hundred points higher than that.
Yeah, I mean, relative strength is not moving up here. I'd love to see it, you know, move up a little bit further too. I hope risk continues to rally here, and
Larry Kudlow, Blake.
It's the Larry Kudlow rally. It might end up being the Larry Kudlow top.
The Mark Haynes bottom and the Kudlow top.
Could end up being, you know, could end up being it. You know, and one thing, and you said, hey Blake, great call on the yen yesterday. I traded it like poop. I mean, first of all, I closed out the pattern and play in the New Zealand yen. I've been buying this thing on dips, and then yesterday we had this, you know, shooting star candle. You can see it. Let me get rid of the current candle. We had a shooting star, and I'm like, you know, I can't be buying the dip anymore when it looks like that. So I closed out the pattern and play. And look at this. Look at today's candle. Straight up. I mean, straight up. And last night I'm sitting here looking at the dollar yen, and we were trading at this 30 level all night last night, or down here. We were trading at this 30, 40 level all night. And I had all night to buy it. And I'm like, maybe I should get long this overnight. And I'm like thinking to myself, maybe I should, maybe I, you know, and then I just was waffling on it. I'm like, you know, I want to be able to sleep tonight, and I didn't. And you know, the dollar yen is making its move higher, and I still think the dollar yen can extend, you know, extend up here. Now the risk is CPI. If there's the news today is the most important news of the week as far as the dollar goes. We have CPI today, and we have producer prices tomorrow, but really consumer prices is what everybody's looking at. And today the market's expecting 0.2%. And so, you know, if the number is weak, maybe the dollar yen ends up stopping here. We are not too far, and maybe we just hit it. Let me see here. We're not too far away from the 127% extension, which takes us to 107.30, which is the bottom of this resistance zone, and maybe that's it. You know, maybe the dollar yen is finished here. If we do have a weaker CPI number, then, you know, we got to start thinking that the dollar yen is stopping here and not going any higher. So, and I'm not, you know, I'm not 100% sure what I want to do with the dollar yen, because what I'd like to do is I'd like to sell it at 108 after rallying, you know, 100 pips overnight, or, you know, basically, you know, 80 to 100 pips or whatever we've gone overnight. I'd be more apt to sell it on a spike higher on maybe some higher inflation data. But I don't know if we're going to get that. Again, we're expecting 0.2%, which is coming in less than last month. That came in at 0.3% on core. So if we print, you know, a fairly benign number, you know, maybe the dollar yen does fail up here. But that's something that I think we should all, you know, be paying attention to whether you know, whether I sell it, you know, well, I'm going to sell it after the number if I get an opportunity on, you know, on a spike up. But regardless, I think that we're entering like a sell zone for the excuse me, for the dollar yen, especially after such a big move up overnight. The euro dollar, we just had some ECB comments on how they're not worried about the euro dollar exchange rate at current levels, and that came in from ECB Lane. So there's no concern about current euro level. Okay. Must be concerned about volatility, but the euro dollar spiked up on that news and then came down a little bit. But you know, what the ECB is basically saying is they're not worried about the euro where it's at 123.50. Probably don't really care if it's at 125 or 126. So they're not really worried about the euro at current prices, and that, you know, we have to pay a little closer attention to, especially if you're, you know, if you're trying to sell the euro short. The ECB is not really too terribly worried about it right now. The dollar Canadian, I'm actually selling some dollar Canadian up here. These are prices that I want to be on the short side, up at these levels, and you know, I'm playing into the risk going higher. Okay, and tariffs, you know, the exclusion has allowed for the dollar Canadian to rally, but I think we can play the Canadian to the long side. Now, one thing that I do have to note is this channel support, or very loose channel support, but you can say it's, you know, channel support here is pretty important at the moment. So let me go ahead and just draw that a little bit better. Let me get rid of the upper trend line here, and let me grab this lower trend line, duplicate it, put it up like that. Okay, so that's the way I think we should be looking at the Canadian right now, and really a drop below 128.30, somewhere around this level, you know, 28.30 and 28.25, somewhere around here. That's where the dollar Canadian turns bearish once again. But you know, I've already sold a little bit, and I don't mind, you know, selling it while it's up here at these levels, but I don't want it to get too much further either, you know, much above 129, and I'm not going to stick around anymore. Then let's see, anything else that I'm paying attention to? Oh, you know what? I'm looking at the dollar Mexican peso. This is another pair that is really, you know, at risk now. We're at risk of slumping back towards the 200-day moving average at this point, and it, you know, if we break below the 200-day moving average, that might expose a lot lower levels, and we have a big, you know, this. If you can't see it here, let me see if I can make this a little bit better. Let's see here. Nice little head and shoulder pattern developing, right? Now, what I don't like is I don't like head and shoulder patterns going in the direction of, you know, the trend that's developing, because we can't really complete this. I mean, it could take us down to these lows again, but you can see that, you know, this failure up here is probably going to start weighing on the dollar MEX, whether you look at it as a head and shoulder pattern. Here, let me get rid of this just to make it a little cleaner. You know, head and shoulder pattern, but a move below 1830 is going to be pretty bearish in the event that we break in the event that we break down. Let me get rid of this fib too, because that's a little messy. All right, kind of clean up the chart a little bit just to give you a better view of what we're seeing here. So you know, it's something I think that we all should be paying attention to, especially if we clear this 200-day moving average once again. The dollar yen, again, we talked about the dollar yen, but we are getting right into the sell zone. So any failure up here is going to be noticeable. Remember, while we're below 108, the trend is down. I know it's up right now, and I know we've rallied 100 pips overnight, but while we're below 108, it's a bear. It was a bearish breakdown, and even one of the notes that I read from one of the banks this morning, their trader was saying, "Hey, as long as it's below 108, he's saying the same thing. You know, as long as it's below 108, it's a short." Regardless of the rally that we're seeing at the moment. So the banks are on the same page as I am, and I have been for the last couple of months. Now, let me also say that if we break above like 108 and a quarter, the dollar yen would squeeze big time. It'd be a very big squeeze, and that's something that obviously we all have to be cognizant of. Even though I don't have any dollar yen shorts or any yen longs, if I did get short the dollar yen, that is something that without a doubt I'll be paying very close attention to. Now you mentioned precious metals. I don't know where Dale went, but Dale talked about precious metals. Now, one of the things that would really push the dollar yen lower would be a rally in gold, and I know we're kind of, I look at gold right now, we're in no man's land. This is we're being held up by the 50% retracement. You can see it here. There's the 50% retracement, that spike low. We're also capped by, I'm sorry?
I think we'll go to 61.8 or close to it. Your blue moving average line and 61.8 confluence.
Okay, down here. Yeah, maybe. I'll tell you, like, I'm not really too excited about gold at the moment, but I will tell you this much, that a break above here would confirm that the dollar yen is moving lower once again, and then a break below here, that means the dollar yen might actually be at risk of moving above 108. So yeah. I'm paying close attention to gold as a confirmation tool more than anything for what I want to do with the yen pairs. So, and that's what I'm looking at right now. And I'm not excited about gold at the moment. I'm excited about the opportunities of a possible breakout. But that's pretty much it. Let's see, anything else that Euro's pretty firm. Oh, the cable. We got to pay attention to the cable. We got a nice little triangle developed here. A break above these highs, that would be pretty bullish for the pound. If the pound broke above 139.35, I think that would be significant, because you got a triangle that has been developing, but the bearish triangle break of the previous triangle, this previous triangle, you can see it right there, okay, never fulfilled, and it never followed through. So the market could get stuck short if we break above these highs, and that's something that we should think about as well. So there's just a few things that I'm looking at, and I want to ask everybody that's listening in, have you guys entered our giveaway yet? Have you? If you guys, I'm gonna look at the Q&A panel and see. I can't see if I can get to it. Okay, if you guys haven't got an opportunity to do the giveaway, let me go ahead and grab the page here. Make sure I get the link for you guys. Here's the link, and we have a countdown clock, so you know exactly how much time that you have to do the contest. So let me go ahead and copy that, put it in the Q&A panel for you guys, or in the chat box. There it is. All right. So make sure you guys do that to win some free gear or annual subscription, or no, I'm sorry, a semi-annual subscription or a 3-month or a 1-month, and then all the winners will get t-shirts, mugs, mouse pads, and then the first 10 winners. So it's really easy to do. Make sure you just select, you go, okay, well, closing price of the euro, S&P, gold, dollar, yen, and crude, and you have these selections, and all you have to do is just select what you want, and then, type in your email address and submit. Make sure you select them all. Okay, make sure you guess on all of them. And you have exactly 1 day and 15 hours, 34 minutes and 5 seconds before the contest. You have to have your submissions in. So there you go. With that being said, I got to get ready for CPI. Steve, are you here this morning?
Sorry, I'm busy voting.
Okay, yeah, good. I'm glad that somebody's voting. Very good. How are you doing today?
I'm good, mate. I'm good. How have you
been?
Good.
Good. Just my back's a little tweaked. I don't know what I pulled it doing something last night, like the way I slept or something. So I'm a little uncomfortable. Other than that, doing great. I just got to. What's that?
You pulled it moving to the age of 46. That's what happened.
Yeah, that's probably exactly what happened. I moved too fast in one direction.
Well, Blake, it's not a good sign when you get sleep injuries.
No, that's not a good sign, is it? Anyway, well, Steve, I'm passing it over to you. Good luck today, guys, and I will see you guys tomorrow. And thanks everybody for listening in.
Thank you, Blake. Good luck.
Kick some butt, buddy.
Thanks.
Stelio, are you with us?
I'm always with you.
Oh, okay.
Hey,
Nice.
Stel, what did you think about that silver presentation? I did it to give you hope.
He likes it.
I like it. I've been long for a while. It's been going nowhere.
Yeah.
So it's frustrating. But you know me, I'm long with very low leverage, actually zero leverage on this trade. Yeah. So I can afford to wait a little bit.
That's a good sign about the silver shares, though.
Yes, it is. Yes. I've actually debated with myself whether to actually go long silver miners, and I haven't yet. So that's something I'm actually debating.
I'd like to see one more shot down, maybe, in the silver and gold, and I may go with Coeur d'Alene, CDE. Oh, and Steve, I have some very terrible news for you. Since you're a Kiwi trader, they don't want any foreigners to move to New Zealand anymore. Their government.
Really?
I read an article on that. Yeah.
Okay.
And no foreigners or no Greeks?
Well, no, Americans too.
Oh wow.
There are developers that have built resorts and stuff that American money, and they're not happy about this. But anyway, just wanted to let you know that don't think about moving to New Zealand.
New Zealand and Australia always had very strict policies for migration.
Well, you can't get any stricter than we don't want any foreigners, no matter how much money you have in the bank.
Yeah, probably that's the end of the line in strictness. That's true. Anyhow, as Blake said, in 1.5 minutes, we have very, very important data. It's CPI data. Obviously, the market is 100% focused on that. Most probably, that's also why we yesterday saw the vast majority of the dollar crosses more or less like do nothing, or anyhow, be very subdued. And I think that, the CPI print should also affect risk appetite. So it's less than a minute now. Stelio, we also have some secondary data, if I remember right. Correct?
Nothing really worth mentioning. Just CPI and core CPI. There's like real earnings number, which is nothing. I never look at that. So it's actually just CPI today, from what I can see.
Okay, let's go ahead and see them.
Yeah. Stelios is our reporter on the scene.
Yeah, you're right. All the rest of the data are really secondary in nature. Okay, let's go ahead and see.
Steve Leisman.
Obviously, USD yen, is going to be the first tell, and then of course at the same time treasuries.
Everything seems in line. Everything.
Okay, that's why we don't see anything moving.
exactly in line. Yeah.
USD yen strengthening a little bit. Yeah, 0.2 versus 0.2. CPI, core CPI. Yep, month on month. Yep, everything is in line. So now let's see where the market wants to move, because in a sense, you know, the line. Yeah. It's obviously, you know what I mean. It's obvious that the market wanted to move higher. The dollar wanted to move higher, but it was holding off, a little bit ahead of the CPI, because you never know. I mean, if we had like some big miss, people obviously didn't want to commit. So let's see what's going to happen from here. Obviously, the major pairs besides USD yen haven't been moving a lot. Blake already mentioned it. We said it as well yesterday. USD yen is trying to establish above this descending channel. We definitely found support at an important area. Now, Blake, I know that Blake said that he would like to see like 108 and a quarter. Personally, this ascending trend line here, I think that it passes a little bit higher from there. But okay, it's regardless. Let's agree that it's, let's say, 108.50 roughly. So yeah, as long as we remain below that, I do see the potential of USD yen rolling over and moving lower. Obviously, we would need to see some equivalent reaction from the side of risk. And as you see, the moment we got CPI, risk was immediately bid, which means that the market wanted to move higher. It was just holding off ahead of the CPI. Now, of course, it remains to be seen if this is going to be faded as it happened yesterday, because yesterday we actually closed flat. Initially, pre-market, we were higher, and after the market opened, we slowly pushed lower and closed unchanged. Now, still a possibility of a triangle interpretation here, but obviously for that to happen, we'll need to see a rejection rather fast. Obviously, this 78.6% fib, which comes at below 2803, is an area that could happen. A little bit higher, we have some more resistance close to 2815. Yeah, but we do need to see something, because at the moment, we just see that volatility is moving lower. The Nasdaq, as you mentioned before, Dale, is breaking to new highs. The only index that actually is behaving very well according to the possible choppy environment for more days to follow or more weeks to follow is the Dow, which is trading within a triangle. VIX, though, has been steadily dropping. A couple of days ago, we even touched the 13 handle. As I said, I very much doubt that we can just slip back below 10 and start trading it once again, like in a very subdued range of, let's say, 8 and 10, as we did like for a long period of time. But that doesn't mean that this couldn't possibly be like a week of risk on. So we might get a week that in general risk remains bid if something negative doesn't happen. Now, by the way, we're Blake covered already quite a lot of charts. I want to show one more, and this is the USD NOK. Blake said that he likes now the USD CAD to the downside. So in essence, he would like to be selling rallies. I'm still not sure about that, because I have this horizontal zone holding, but I can tell you one thing for sure, is that if that applies once for USD CAD, it applies twice for USD NOK, which even from the reaction it had, you can see that it was purely a reaction of consolidating, which means that there is this is a weak market. The NOK is very strong against the USD, and it looks like to me that if USD wants to retreat from here, USD NOK is one of the places you definitely want to be at. Now let's have a look at the DXY, which we didn't do yesterday. Nothing has changed here. I just wanted to show you that one way or another we remain in the middle of nowhere. I mean, if you can judge this as an expanding triangle, which can likely prove to be like a bearish consolidation, given given the fact that the trend is definitely bearish. RSI is also now mid-range, which means that it has a lot of room to move to the downside once again, but that doesn't mean that we have confirmation that dollar is going to move lower from here. In fact, as you see, there is no risk reward to do anything here. I mean, we have 91 that is capping. That is a very, very strong area of resistance. It proved to be so once again, although we said that before we even retested it, but like at the very beginning of the month, first day of the month, we got rejected from there, and that's also something that makes me skeptical about dollar and dollar strength. The fact that the first day of the month so far has produced a high, and we've talked several times about seasonality and the tendency of markets to have much higher chances of printing a high or a low at the very, very first few days of the month. So this is another factor that makes me quite skeptical with the dollar, but we're still mid-range, right? So I mean, not much to do. Obviously, if we break below this 89.40 low, it's going to increase slightly the chances that then we're about to push to the downside. But regardless, until that happens, the dollar is in the short term without a trend, because there is a trend. The trend is lower since the very beginning of last year, but in the short term there is no trend. By the way, cable, as we speak, cable is pushing this bull flag resistance, and that's also something to take notice at. I'm actually probably going to get involved with the cable. I wanted to buy it a couple of days ago, but I said to myself, like, you shouldn't be jumping the gun, because it can definitely push lower towards 136 once again. But I really want to buy it. I mean, this formation is textbook consolidation in my mind. So I probably on a daily close above this trend line, I'm going to be a buyer. So I'm going to be involved with it quite soon. Now let's have a look at the euro. Euro more or less in the same situation as you see. I mean, this looks like a textbook consolidation to me as well. As long as we stay above 120.70 to 121, I think that the trend remains higher. No questions asked there. RSI seems to also be capped by this trend line, but it looks to me like it went a little bit lower. So overbought conditions were worked off by the market, and it looks to me like it's also ready to make a move to the upside. Right now, between the euro and the pound, as we were saying yesterday, as long as we remain capped by this channel's resistance, and we're near the highs, probably I would benefit the cable. That's why I'm looking to between the two of them to be buying the cable instead of the euro. Now let's have a look at commodity currencies, because as I said yesterday, I see some signs here that at least the Aussie, because the Kiwi anyhow was never that bearish. I do see the potential for a break higher here. I mean, if this was like some kind of a leading diagonal, or you can call it a descending wedge or whatever else, we can definitely see a move higher towards this resistance. Let me show you how important this resistance is, by the way, the red trend line resistance, or back to this ascending trend line, if this is like a larger consolidation of a very large bearish trend. One thing is for sure, Aussie is currently testing resistance. This 78.90, you can call it 79 area, has acted as support in the past, has acted as a resistance. The 50 daily moving average is also here. So, this might temporarily cap, but if we see any weakness, and the move lower in the lower time frames look corrective, I might actually be even looking to buy it. Now, if we look at the Kiwi.
Before you do that, Steve, you may want, Ziggy thinks you should feed your kitty. or he's going to report you to the Anti-Cruelty Society.
No, actually, you know something. I bet nobody cares about that, but he's actually it's a he. It's my male kid because I have a female as well. He's actually playing with a little whale. I found him 7 to 10 days old, abandoned by his mother, like below my house, and he was like, he hadn't even opened his eyes or his ears, and he was being eaten alive by leashes or whatever. So I had to take him, make him a little house, because he needed to be. So among
Steve Volge.
Yeah, I don't want to remember that actually, because for 3 weeks consecutively, I had to wake up every 2.5 hours to feed him with a bottle because he was too young. But bottom line is that my wife had bought him like a little whale to keep him company in the box we had, and since then he considers that to be like a little brother or a little sister. So from time to time he's like taking her and like speaking to her, and he does that all the time. I mean, like that might last like 15-20 minutes.
Cute.
So it's him talking to his little whale sister.
All right. Great story. All right.
Yeah. So Kiwi actually, speaking about the Kiwi, is mid-range. I mean, Kiwi didn't break down as the Aussie did. It actually remained in a range, and that's why we were very skeptical about Kiwi to begin with, because we had said that, okay, listen, this might be a double top, fine. Okay, by the way, cable is breaking out as we speak. So we had said that Kiwi might be forming a double top, but in order to confirm that, we also needed to break down from that low, and that actually didn't happen, right? So as long as we had a move higher and what seems to be a range now, the chances increase that this thing might break to the upside, right? Because this move was higher, market working off a correction / consolidation, and the chances of a resumption higher are, decently high, I would say. So this is another reason why I think that Aussie looks good. The fact that Kiwi kept diverging and never followed, and we know very well that the two of them might be running in different gear from time to time. So many times one of them might be weaker or stronger than the other, but them moving in opposite directions is something that never happens, right? They might be diverging for a little bit, or they might have a divergent momentum from time to time, but not running opposite directions. So the fact that Kiwi never broke down from here, is another factor that made me very, very skeptical with the Aussie to begin with. Here's the cable, by the way, breaking out as we speak. Okay, so let's have a look at a few questions.
By the way, Steve, there's this headline a minute ago that Trump fired Secretary of State Rex Tillerson.
Is there anybody that has stayed on since he first?
There's a long list of people, I think, which is literally like 25 people who have gone or been fired or whatever.
In all honesty, I have no idea, and I really don't care what they're doing there. I mean, in the government, that's their own business. But in all honesty, just an outside observer, when you end up within a year firing like the vast majority of the people that are around you, there are, two potential explanations. One, you made bad choices to begin with. Two, there's something wrong with you.
Yeah, both potential answers are equally bad, right?
Yeah, but both of them are a little bit troublesome, aren't they?
Yeah. It's definitely not a positive thing. Let's put it that way.
Yeah, and a government, no matter where it is or whatever, I mean, stability is quite important because many people don't realize that, but being secretary anywhere is something that initially involves you to spend a lot of time to getting to know what you should be doing, what your objectives are, getting briefed about what the situations are. So in essence, switching people places in so important positions actually holds progress back, right?
Yeah, and the rumor now, actually, no, it's not a rumor. Washington Post is saying that he will be replaced by the CIA chief, Pompeo, whatever his name is. So that's quick. That's very quick. I don't know what to make of all this. I mean, it's I don't know. I can't see it as being positive. Let's put it that way.
Okay. So let's see how that works out. USD NOK is pushing to the downside as well. Let's have a look at risk. Risk is still decently beat. Yeah, okay, we're a little bit off the highs, but I mean that doesn't really mean anything. Definitely the dollar though is taking one up the chin since the CPI, which I mean the CPI was obviously in line, so can't be the CPI. So perhaps the market just was waiting for an excuse to sell the dollar since it didn't beat. It's doing so. The market's going to do whatever the market's going to do. Let's have a look at metals, because we were having a look at them before the CPI, but not since. Okay, so gold is bid for sure. This is a nice outside hammer. But keep in mind, you have to hold a very small basket here, simply because we remain in a very, very choppy range. It's likely a triangle. And we're currently in the middle of nowhere, as Blake said as well, and as I've said the previous days as well. And silver, more or less the same situation, right? I mean, you understand that something is completely untradeable when you just need to try to figure out what kind of a formation, of a technical formation it is in, and you have to keep redrawing and redrawing and redrawing, which is what has happened to me with silver, gold, because in essence they're going nowhere. So you're thinking like, oh, is this a wedge? No, it isn't. Then is it a triangle? Perhaps then it isn't. Or is it a bull flag? Then it violates that as well. So simply put, they're not looking to go anywhere fast.
And, yeah, but the one internal I would take notice of, which I talked about earlier today.
Yeah, I heard it.
It was reversing. Yeah, gold's up 0.2%, silver up 0.6%.
Yeah, and I saw the nice divergence that you also showed, having to do especially with silver miners, right?
Yeah.
Yeah. Although I have to say that from the charts you showed, I think that silver is not so much divergent. What is divergent according to the price of the metal is probably gold. I mean, gold should have been lower according to where the gold miners are trading at the moment.
Right.
But it seems to be
both opposite.
Yeah, but it seems to be holding.
Silver shares are stronger than silver, but gold shares are weaker than gold.
Yeah, and you know something. Yeah. If we look at the long-term charts, and I have to say that silver is still completely without a trend. You can see it here, right? Keep in mind though that, in my opinion, if we break above here, above 1850, that's going to be a major bullish development. So if at some point, which I believe at some point it's going to happen, we get a break above here, I think that silver is headed much higher.
Yeah. And Steve, our friend, sorry to interrupt, our friend Andy here actually said, what about the silver gold ratio? Which, if you look at it, it's the gold to silver ratio, is actually near highs, not all-time highs, but it's quite high. And that usually comes before a major rally, and where silver outperforms gold in a rally. That's how it usually happens. So that's another thing that points to silver outperforming gold. And look, it's like there seems to be like a zone there now between 78, 79, and 84, which has proved very difficult to pass, and usually it comes right back down. So just another thing that Andy mentioned, and thank you for that, Andy.
Yeah, that's a good point as well. So what I was saying here is that silver is in a very tight consolidation in the long-term chart. This is a weekly 1850. We're headed a lot higher. But gold, on the other hand, somebody can claim. I know there is no momentum yet, but somebody can claim that gold has already made a move, right? I mean, we're not seeing follow through, but definitely this trend line. I remember that back here, everybody was paying attention to this trend line. Everybody. And as always, Mrs. Market, wants to trap people because everybody was closely monitoring at this descending trend line. When we finally broke above it, then it moved back below. Everybody was like, okay, that was a false break. Now gold is bearish. Then we broke above it once again, but everybody had lost their interest because it was like, okay, this trend line didn't actually produce the momentum we expected it to produce. Regardless, somebody can even view this as a breakout from here, and the last move higher in gold is quite obvious here because it was what, 2, 4, 5, 6 weeks higher within 7 weeks, and this can end up being, but we need to break higher quite soon so we don't invalidate the criteria for a bull flag. But this looks like to be like potentially a bull flag, and we can move higher from here, but we need to do it like ASAP, right? Otherwise, any potential symmetry is being lost here. So I'm not saying that you should be buying gold here, but I'm saying that if you look at the weekly chart, it doesn't look that bad. It doesn't look that bad for sure. Definitely 1380 is going to be a major level, because if we break above 1380, first of all, this is the 38.2 of the move lower, so it's an important fib. But second of all, we finally post a higher high on the long-term chart by breaking above the summer 2016 highs. So I think that above 1380, and something bigger is going to come for gold. Okay, let's have a look at a few questions and we take it from there. So let's see. Euros and Euro Kiwi. Absolutely. Let's have a look at it. By the way, give me a second to check USDMXN as well, because we had some alerts here. Yep. Something, I know that Blake showed it. I know that Blake sees it as a little bit of a different formation. I also see the potential of a head and shoulders, but for me, it's even simpler than that, because look at this. RSI was diverging, but we broke below this trend line now, and this was leg lower, pennant, breaking lower, right? USDMXN doesn't look good to me, and this is another commodity pair that the commodity currency seems to be overperforming USD and to be looking good. So I think that USDMXN, looks like a good short. And especially given the prior move, you can see it, which was lower, at least like an A, B, C, and then move lower, looks good to me. And as I said, even the RSI is behaving exactly as you would want RSI to behave in a bear market, because look at it. It rebounded, but it found resistance below 60, which is usually what you want to see when the trend is down. And it's now breaking lower. So also, let me add to this that we've had what now? 1, 2, 3, 4, 5, 6, 7. This is the 8th consecutive down day so far today. So USDMXN looks like wanting to resume to the downside. Okay, let's have a look at the Euro Aussie and the. There we go. Okay, a little bit of a rebound, but if you go down to the 4-hour or the 1-hour chart, in all honesty, you'll see that this move is impulsive in the short-term time frame. So in all honesty, I expect this rally to fail. I think this is some kind of a pennant, right? So this is what I see here, Abdul. And let's go to the euro yen. Unfortunately, this happened to the euro yen, and I say unfortunately because as long as we've now broken above this, I think that between 131.50 and 134, let's call it 30, it's a dead zone. It's a zone that had trapped this pair for months. And, you know, we have a strong resistance here. It was a strong support resistance area here. It proved to be, once again, because we actually needed, like, this was the 6th day that we tried to penetrate through the zone, and we're actually doing so now. Of course, we need to wait for the end of the day to confirm, but let's say that we close above it. I would say that, you know, this would favor a little bit more euro yen strength down the road, but, you know, who can guarantee us that 134.30 isn't going to reject once again, even if we make it there? Plus, I have to say that I would at least want to see one more leg lower at some point. So even if this is to be a correction, like a move lower, a reaction, and then another move lower is missing for me. So I would hesitantly still be looking for opportunities to be short the euro yen if I wanted to do something with the euro yen, which I don't, because I think there are better and cleaner opportunities out there, to be very clear. Okay. Now, if 131.50, 60, 70, like this little area, actually held and we got a big rejection from there, I would tell you that, yeah, it's a nice opportunity being short euro yen for at least a move towards 128.70, but it didn't hold. Hi, Dale, we're losing our prime real estate and taxes to it. To wealthy foreign buyers, not to mention the exacerbation of our housing crisis, buyers parking money here in homes and leaving them empty, all changing under current government. I guess our friend Daryl is from New Zealand. I'm guessing a lot of Chinese buying, right, Daryl? At least in other countries, that's what I've seen.
Yeah, I wouldn't be surprised. The proximity. They sure moved U.S. real estate markets. They moved every market.
Yeah, you should see. Actually, it's a good opportunity for me to mention that ForexAnalytix is going to the IFX Expo in Cyprus this year as well. So we're going to be there. We can also, like the previous time, live broadcast from there. We're going to be there between the 22nd of May and the 24th of May with Stelios and I actually. Yeah, Cyprus, for example, it's mostly Russians, but you know, Chinese as well. I mean, you see that there are many countries that foreigners are buying, like the vast majority of like decent real estate that comes in the market. It's amazing. It's amazing. Just to give you an idea, for example, in Cyprus, which is
they bring suitcases full of cash when I was selling my house.
That's mostly in you know, a target for Russians, but there are other places that are mostly targets for Chinese.
Yeah.
Just to give you an idea, Dale, there is no real estate agency that they don't have somebody speaking Russian, and you know,
Cyprus or Greece?
Cyprus.
Okay.
Cyprus.
Oh yeah, they yeah. I mean, they're the ones that took the hit on the bail-in. Mainly a lot of Russian money, or maybe it's the people. The people did too, but that bail-in was painful for a lot of people.
Yeah, it was, but yeah, it was, but still, Russians didn't leave the place. They
probably got their money out in time, you know.
Many of them, I guess, did, and many of them, anyhow, you know how it is. If you have, let's say, 5 million euros in a Cyprus bank, probably you know, you are a person that has advisors. that wasn't all your money. You know what I mean?
Right.
And Cyprus is still a very friendly destination for investments. It gives amazing incentives to become a citizen, or at least for accounting reasons. There, for example, if you switch your tax ID like residency to Cyprus, you pay zero taxes to your global income for 10 years.
Wow.
Zero.
All right, I'm going. Okay. Yeah, there are certainly a lot of FX brokers and everything in Cyprus. So.
Oh yeah, absolutely.
Yeah. Well, we got Norm here, and I don't know if you and Stella are aware of it, but we're going to be attacked by the sun in the next few days. One of the largest solar flares, and we'll have a pretty big geocosmic storm here on Earth around the 18th. So, Steve, you probably want to put your Ferrari in the garage so the electronics don't get fried.
And build a bigger bunker.
Yeah, well, and if you're not in great health, they say it can affect you. Anyway, a lot of neutrons and protons and geomagnetic energy about to bombard Earth around the 18th. So, Norm, I asked Norm about it. He said he doesn't know anything about it, but he wrote about it in his notes. So, I'm going to put him on and.
Okay, enjoy the interview.
Okay, buddy. Nice analysis, and we'll see what happens with those silver shares today, with the metals being pretty firm. So, I'm not in yet. So they're probably going to fly. All right. Norm, how are you? Welcome back to FACE. I've just made you the presenter.
Go to my screen. Okay. Can you hear me?
Can hear you, and I'm waiting to see your screen. There we go. There's your S&P.
All right, we're good to go
So,
then, right?
Yeah. So Norm has been dealing with the planets going back to high school for people, and then started applying it to the financial markets, and was a very successful options trader at the SIBO, a member. And in his latest writings, he brought up this solar flare that's going to hit Earth around March 18th, and he told me that he's not a physicist, and that he didn't know what kind of ramifications it would have from the market. But Norm, I've looked into your background and found out that at one time you were a proctologist. Okay. Where did you practice?
Uranus.
All right, good one. I thought we'd start off with that.
Okay, you set them up. I'll whack them down, right?
Anyway, we're failing from that 2,800 level that you pointed out in your writings.
The comedy stylings of Dale and Norm.
Yeah, we rehearsed that. How'd it go, guys?
There you go.
Okay. All right, let's get serious. How can people make money using planets? And I know no one better to talk to than you.
I think I was last on your show in January. I almost always talk about the moon, new moon, full moons. Yeah. What an excellent indicator it is for turns in the markets. Okay. Right. And so let's see how the last one did for you if you followed my instructions. It's pretty easy to look up when a new moon or full moon is. The last one was on March 1, 7:51 p.m. Eastern Time. We had a full moon in the sign Virgo. The sun was in Pisces. I'm going to go over what I call our usual suspects. In other words, the ones that almost always are affected by the new moon, full moon. And then I got a couple of bonus markets due to the moon being in Virgo and the sun in Pisces, which would be soybeans and oil. So our usual suspects are financial grains and precious metals. Well, let's go to the S&P 500. There you go. Your full moon was at almost 8 o'clock at night on the 1st. The next morning, the S&P makes a nice low, and then it goes up, up, up. Okay, here's your T-bonds. They topped out there at 6 in the morning on March the 2nd, and then they went down.
Yeah.
Here's your U.S. dollar. I know you folks love that. Dollar index there and making a nice stop there. 2 hours after the full moon on 10 o'clock at night on March the 1st.
Amazing.
Here's your euro. I made sure I included that. It's making a low 10 o'clock at night on March the 1st. Can it get any better?
Multiple turning points in different instruments on the moon.
Right, all right around the full moon. Here's the gold, making a low at 10 o'clock at night on March 1. Okay. Here's your soybeans. It made its turn on the morning, at midnight, just past the gold there, a couple hours later at midnight.
Can you trade the beans at midnight? Is there an aftermarket in beans?
They do trade a little bit overnight, not real liquid, but I'm just showing you the data, and you can, act accordingly. You can choose to start watching this stuff or ignore it at your own peril. I don't know. Here's the crude oil. Crude oil turned at 9 o'clock at night, 9 o'clock in the morning on March the 2nd. Pretty amazing, right?
Yeah.
So here you go. Here's what's coming up. Last night we had some things happen, cycles points for the U.S., which means we should be watching U.S. stocks, T-bonds, and U.S. dollar. Over the past several days, I've alerted my clients that S&P 2800 is a key level, major key level here, and it's wrestling with that level right now. The cash S&P got to, I think, about 2797 yesterday on a high, and the futures Sunday night got to 2805 and a quarter. Right after the opening yesterday, the futures got to 2802 and a change. And we just spiked up on some news, and now it looks like we might be backing off a little bit. Got right to the 2800 level on the futures, and it looks like they were backing off when I last looked a little while ago.
Yeah, 91 and a half less.
There you go. If it turns rolls over here, we could be, if you folks are Elliott waivers, I think it looks like we had a big ABC down, and now we have an ABC up, and we might be completing that C wave for the, see, that would be the A down, B up. This would be the B wave. And then we're headed for the big C wave on the downside. And that could be very, very, very negative for the stock market, at least in the short run,
Yes.
You could have a substantial decline in a very short amount of time. What's that?
If that's a scenario, I think in your writings you were talking, what, about 2413 or something like that?
Yep, it could be even more. Could be even more. Let's just take it one step at a time, though.
Okay.
We got some things happening here for, let's see, Jupiter to Neptune. Jupiter and Neptune. Neptune is in Pisces, and in its own sign of Pisces, so double power there for something the biggest happening here for oil. And we have, again, Jupiter making a moderate angle to Saturn in Capricorn. And so we want to watch coffee. And here's, anytime you see Mercury doing something special, that implies watch the grains. That's coming up here in the next couple days. And AC, by the way, on my notes here, means after the close. So this is, let's see here, we have today, 13th, after the close, we have the Jupiter to Saturn thing. And then a couple of days in the morning of the 15th, things get busy again. And we have the Mercury at a key point in its cycle. And then things get really busy Friday and into the weekend. We have lots of stuff happening. We got some really negative cycles for the U.S. Here's another negative cycle for the U.S. We have, and of course the new moon's coming up over the weekend and for the 17th. And, change in trend. So all those markets I showed you, those are subject possibly to big change in trends. What you want to watch for is any market that's at some extreme. It's been going up, or down. That's subject to a big reversal. Over the weekend, we have Mars changing signs, and that's another indication for a possible change in trend. Mars is going to go into Capricorn, and that's coffee. So we got coffee on our watch list also. So here's the stock market. I do the most for the stock market than any other market. I do sort of Gann market math, and we have coming up this weekend, the end of the week, over the weekend, right on the new moon on the 17th. We have, Pythagoras created the mathematics for all of Western music. There's a whole musical structure for music, and that one of the numbers pops up for 13,004 days. That's from the big August of 1982 low. That was a huge bottom. The stock market that led to the bull market that led all the way to the internet bubble top of 2000. Then we have, I do Fibonacci time cycles. We have the 13th and the 14th. That's right now. Then we have another cluster due over the weekend. And here's your S&P 500. We had something for yesterday, possible top, and then we're going to be looking at Monday the 19th, just past the weekend. We have another Astro date we just had yesterday and today, and then it gets busy again at the end of the week.
And you got
here's your S&P 500.
Three different things.
I'm sorry?
29. Three different calculations at 329.
Oh yeah, well you're getting to the end. You're getting to the end of the month there, Yeah,
329.
I'm focusing on this week how we can make some folks some money right in the near future, Okay. All right, here's your S&P 500 chart as of last night. You can see here we're at this key level here, 2,800 level here, and there's some Fibonacci harmonics here. It's a 786 retracement of this whole down move. I think there's 1.618 times this little rally here, and it takes you up right to 2,800. So this is the key level. If you do break out over this level, then we could go all the way back to the highs, or maybe possibly even higher before it rolls over. But it still looks like a three-way structure on the upside. So in the bigger picture, it's hard to make this thing look real positive for the near term, even if it does go up,
Okay.
Here's cocoa. I mentioned cocoa is on our shopping list, possible list of changing trends. This market's been going up since December. It looks like it's possibly, you got broadening bars here, widening bars, and so it looks like it might be setting up here for some kind of top in the next day or two,
Love hot
Here's
cocoa.
the hogs doing just the, what's that again?
Love hot cocoa.
Me too. I'm a chocoholic.
Yeah.
All right, here's the hogs doing the opposite. The old hogs looks like they're looking for a trough. There's a little hog humor there for you, Dale.
Yeah,
hogs
love bacon.
looking for a trough, What's that?
Love bacon.
Okay, there you go. Kosher bacon, right, Dale?
Yeah, the rabbi spits on it.
All right, here you go. Here's T-bonds. They're just short, just a little bit under their top of their trading range. They've been in a trading range for quite a while now. And we'd like to see the bonds either get to the top or the bottom of the range by the end, on one of these dates, Otherwise, don't do anything. They're kind of stuck in the middle. Here's your coffee. We got this on our watch list. Kind of interesting. It's kind of going to show some a loss of downside momentum here. It looks like it might be putting in a low,
Yeah, nice.
All right, here's your crude oil. It's in the wedgie mode. You got a big triangle wedge there, and it looks like it might be coming to an apex soon.
Yeah.
Here's your dollar index. You folks all love the dollar index. There you go. The dollar, though, is kind of smack in the middle of its range. So we want to see it move up or move down here into in my key date window to be able to do anything. So stand back, kind of stand back from that for a little while, until it gets to an extreme. It's in the middle. Your euro always reflects what the dollar's doing, and it's doing pretty much the same thing. It's kind of in the middle of its range, so no excitement there yet. Maybe in a day or two, And that's pretty much it. So any questions? You can you can sign up for my free. You can sign up, get a free subscription to my letter for a month. Get a free.
You have a view on
class
sugar?
with that.
You asked
I'm sorry?
a question. You have a view on sugar, someone's asking.
Sugar is not on my list now. I do cover sugar, but it's not on my list now.
Okay, can Can you explain what you mean about 2,800 in the S&P?
Dale, you sound far away now. Did you pull away from your microphone or something?
Can you explain what you mean about 2,800 in the S&P? Is he pointing for a continuation or a top?
Well, this is a big fork in the road for the S&P. If it doesn't break over 2,800, then we could be in a scenario where we could get a big down. If it breaks over 2,800, then we got a scenario where we could get a substantial one more leg up, you know.
Okay, and Ronit said that March 18th is 9 years from the 9th of March in 09 and March 2000, 18 years.
Well, how is March 18th, 09? Why is that significant?
Because it's 9 years from the 2000 high, I believe.
No, the 2000 high on the S&P was on March the 24th.
Okay.
The low in 2009 was on March the 6th.
Okay. Anyway, that's what he said. Let me see if there's any other questions. But if you guys have an interest in it, and it looks like there are at least a handful here.
I mean, this is a way where you can greatly simplify your trading. You don't have to have a lot of movement. You don't need any moving averages or oscillators. So I use simple trend lines and let the planets, and you know, in this case, the moon, tell you when and where to look. What could be easier?
It's
right?
amazing. Yeah, I'm a lunar tick myself.
There you go.
Yeah.
So anyway, I have if you sign up, you get my letter for free if you qualify. Hopefully you have some a trading account is really good and some trading experience and some money so that if you love what I'm doing, you can follow through by signing up for my letter. And I have 2 letters and a course and so forth. And so if you qualify, you can get the letter for free. You get the free class, which is a 5 to 6 hour individual class on Skype. And I should go through my letter and show you all my different forecasting methods and analytical methods that I've learned over the past 50 plus years. I started studying the stock market when I was 15. I'm 67 now. And then I was investing in college and making money, and I made enough money to buy a seat on the fledgling CBOE in 1975. Also traded on the Chicago Board of Trade. And you know, and did that for 12 years, and then decided that I was getting to be an old man in my 30s there, jumping up and down the yelling and screaming, and so I started thinking about someplace warm and sunny, and now I live in Florida.
Okay, Norm, we appreciate you bringing us all these key dates, and if you really want to learn about this type of work, Norm's a great teacher, and you know, let's face it, there's not a lot of great astro stuff out there. So check out Norm. He's a master. Now, thank you very much for your time and sharing your work with us again today, Norm. Good hunting and good luck during the solar flare.
Thank you very much. Just keep in mind this weekend I expect some really big stuff starting about Friday afternoon. We have a big cluster of Mars cycles right on top of a new moon. I think we're going to get some increased volatility, some big moves into the end of the week.
Okay, brother. Norm Winsky, everybody. Everyone thank Norm for sharing his work. His puts a lot of effort into it and for giving it away for free, and well worth considering learning this style that not many teach anymore. And with that being said, that's a wrap for us here. Good Turnaround Tuesday to everyone. Don't forget to vote in the contest. And the whole team will see you tomorrow. And remember, don't just count your pips, count your blessings. Good hunting the rest of the day. Adios. Thank you, Norm.
Thank you very much for having me on, Dale.